The battle for your data is back in the spotlight. Just this week, a major tech firm updated its privacy policy, giving it broader access to user activity for AI training. The public's response? A surge in downloads for privacy-focused browsers, while regulators promise closer scrutiny. Why does this matter? What you search, watch, and even what makes you stop scrolling is now a valuable commodity. This data fuels everything from targeted ads to the AI models that are reshaping our world. With tech companies racing for AI dominance and users growing more concerned about their digital footprint, this data chess game is only getting more intense. Stay tuned, because what's happening on your screen could hit closer to home than you think.
Ever wondered how those free apps you use every day actually make money? Well, here's a little secret. Creating a successful free app is anything but cheap. Just to get a basic, simple version off the ground, you're looking at anywhere from $15,000 to $50,000. Want a more professional, polished platform? That price tag jumps to $100,000, maybe even $500,000. And for a global-scale app like the ones we all know and love, we're talking millions. But here's the kicker. Building the app is just the start. To support 1 billion users, you need a massive infrastructure. That means countless servers, a whole army of engineers, top-notch security systems to protect your data, and content moderation to keep things safe. Add in marketing and sophisticated artificial intelligence, and you can see how the costs just keep climbing. So next time you download a free app, remember all the investment behind it. Thanks for watching. Ever wondered how those free apps you use every day actually make money? It's a fascinating system. So let's follow the money upstream. It all starts with you. You open a free video app and start watching. The more you watch, the more the app learns what you like, what keeps you hooked. This is where it gets interesting. Advertisers see this data and pay the platform big bucks to show their ads to you. Someone they know is likely to be interested. Then, you see an ad for a product you might like, you click, and you buy it. So, the money flows from you, the consumer, to the advertiser, and then to the platform. The platform is the powerful middleman, connecting your attention to the advertiser's wallet. It's a brilliant multi-billion-dollar cycle fueled by what you choose to watch. Thanks for watching, and don't forget to subscribe for more insights. Ever wonder where the real money is made in a business? It's often not where you think. We see the flashy products, the big marketing campaigns, and assume that's the profit driver. But behind the scenes, there's usually a hidden engine, a true profit center, quietly generating the most cash. It might be the less glamorous but high-margin services, the recurring subscriptions, or even the data they collect. Successful companies master this. They identify their core profit driver and build their entire strategy around protecting and growing it. What if you could find the hidden profit center in your own hustle or career? That shift in focus could change everything. Let's dig deeper into this in our next videos, so make sure you subscribe. Thanks for watching. Ever bought something cheap only to have it break in a week? Or signed up for a free trial and then got hit with a surprise bill? These are the hidden costs and risks we face every day, and they're not just about money. Think about that dream job that ended up costing you your weekends and peace of mind. Or that quick fix for your house that turned into a massive, expensive repair. These hidden costs can drain your wallet, your time, and your energy. But here's the good news. We can learn to spot them. It all starts with asking the right questions and looking beyond the surface. What's the real price of free? What's the long-term trade-off for short-term convenience? Let's talk more about this. Subscribe for more tips on how to make smarter decisions and protect what truly matters. Thanks for watching. Have you ever walked into a store, seen a new laptop for $1,800, and thought, whoa, that's way too much? But then the salesperson comes over and says, don't worry, it's only $58 a month. Suddenly, it doesn't feel like an almost $2,000 purchase anymore, right? It just feels like a small, manageable monthly expense. You might even leave the store happy with your new gear. But here's where it gets tricky. A few weeks later, you might do the same for a new phone. Then maybe some furniture, then a big screen TV, and then a smartwatch. Each one is only a small payment every month. But those small payments start to add up, and before you know it, You're juggling multiple loans without realizing how much you're truly spending. It's a clever sales tactic that can easily lead us into debt. Thanks for watching, and be sure to subscribe for more insights. Have you ever seen an ad for a new car and thought, wow, that monthly payment is so low, I can totally afford that? Well, here's a little secret from the wealthy playbook that might change how you think about big purchases. Rich people usually don't get tricked by the low monthly payment. Instead, they look at the total cost of the item. That's the sticker price, plus all the interest you'll pay over the life of the loan. But they take it one step further. They also consider the opportunity cost. What else could they do with that money if it wasn't tied up in payments for the next 5 years? Could it be invested, growing into something much bigger? Thinking about the total cost, not just the monthly slice, is a huge mindset shift. It's about seeing the bigger financial picture. Try it next time you're tempted. Thanks for watching. Don't forget to subscribe for more tips. Hey everyone, let's talk about debt. So many people make this huge mistake. They think all debt is the same, and they treat it all like it's equally bad. But that's just not true. Think of it like this. There are different categories of financing, and understanding them is key. Today, we're diving into the first one, which I call Machine 1, productive debt. This is the kind of debt you take on to buy something that can actually make you money. A classic example is financing equipment for your business. If that machine helps you produce more and increase your profits, the debt is working for you. Another great example is taking out a student loan for an education that significantly boosts your earning potential over your career. It's an investment in your future income. So instead of fearing all debt, start by learning to recognize the productive kind. Stay tuned as we break down the other types. Thanks for watching.
The conversation around debt is back in the spotlight. But we're not talking about credit cards. This is about using debt to finance assets that could actually grow in value, a strategy some call appreciating asset debt. Think of certain real estate purchases or business investments. Why does this matter? While returns are never guaranteed, the goal is for the asset's value to potentially outpace the cost of borrowing. However, with shifting interest rates and market volatility, the risks are significant. This high-stakes financial strategy is gaining traction, but it's a double-edged sword. Stay tuned, because understanding how different types of debt work could impact your financial future more than you think. A hidden kind of debt is back in the spotlight. Just this month, consumer spending on big-ticket items like cars and electronics has soared, often financed with high-interest loans. The catch? These are depreciating assets, meaning they lose value over time. Why does this matter? This trend could be trapping millions in a cycle of debt, paying interest on items worth less and less each day. With inflation still a concern and household budgets stretched thin, this financial pressure is only getting more intense. Stay tuned, because the true cost of that new purchase could hit closer to home than you think. Lifestyle debt is back in the spotlight. Just this week, reports show a surge in spending on vacations, luxury fashion, and high-end entertainment. The catch? It's fueled by buy now, pay later services and rising credit card balances. Why does this matter? These impulse purchases create a dangerous cycle of debt, where the experience ends long before the payments due, making it the most expensive category of all. With economic uncertainty growing and social media amplifying the pressure to keep up, this personal finance trap is only getting more intense. Stay tuned, because the true cost of that perfect photo could hit your wallet harder than you think. The true cost of buy now, pay later is back in the spotlight. When you finance that new phone or car, you're not just buying the product. You're also buying the lender's profit, the cost of their risk, and a stack of administrative fees. Why does this matter? Because the unseen costs go even deeper. You're trading away future opportunity and locking down your financial flexibility for months or even years. Think of it like this. A single coffee seems insignificant. Now imagine agreeing to buy that same coffee every morning for the next 3 years before you even wake up. That's how financing rewires your relationship with money. Stay tuned, because what's happening with your monthly payments could hit closer to home than you think. The true cost of buy now, pay later is back in the spotlight. That new $1,200 phone financed over 24 months may seem affordable at first glance, but the initial price is just the beginning. Add in hidden costs like interest, device protection plans, financing fees, and sales taxes, and the total expense quietly climbs. Why does this matter? This model extends far beyond just phones. Laptops, Couches, fitness machines, and even kitchen appliances are now sold with similar enticing payment plans. Individually, each payment seems manageable. Together, they build a wall of fixed monthly obligations, severely limiting your financial freedom and trapping you in a cycle of debt. Stay tuned, because what is happening with your monthly payments could hit closer to home than you think. The world of buy now, pay later is back in the spotlight. So where does your payment actually go when you finance that new TV? Let's follow the money. The retailer gets paid up front. The manufacturer has already collected their share. The payment processor takes an immediate fee. Even the investors backing the lending company start earning returns right away. Why does this matter? This system creates a future income conveyor belt where almost everyone profits instantly from a sale. The catch? You're the one left on the hook, making payments long after everyone else has moved on. Stay tuned, because understanding this flow of money could hit closer to your wallet than you think. The true cost of buy now, pay later is coming into the spotlight. You might think lenders are just selling money, but the real product is something else entirely: time. They give you access to a product today in exchange for a claim on your income for months or years to come. Why does this matter? It's a psychological game. A $2,400 purchase feels daunting, but a $79 monthly payment feels manageable. The numbers change how you feel, but the economics don't. With consumers feeling the squeeze and financing options everywhere, this subtle shift from total cost to affordability is becoming more critical. Stay tuned, because understanding this model could hit closer to your wallet than you think.